What if the moment you feel most certain about a trade is exactly when you should walk away? Think about your last losing trade. Not just any trade, but the one where you were absolutely convinced you were right. You felt it in your chest, that burning certainty that this was the one. You clicked buy, and within minutes, maybe seconds, the market turned against you. That sick feeling in your stomach wasn't just about the money. It was about something deeper, something you couldn't name, but felt crushing down on your chest. You sat there watching the red numbers grow, telling yourself it would come back, it had to come back, because your analysis was perfect. But it didn't. And in that moment, when you finally closed the position, when you admitted defeat, a quiet voice whispered something you didn't want to hear. What if everything you trusted was wrong? I'm going to tell you about the strangest discovery I made in 10 years of trading. It happened on a Tuesday morning, when the coffee was still warm in my cup, and the charts were glowing on 3 monitors in front of me. I saw a setup that looked textbook perfect. A breakout forming on the 5-minute chart, volume building like a wave gathering strength before it crashes on shore. Every indicator I had learned to trust was screaming the same message. This was the trade. My hand moved toward the mouse, my finger hovered over the buy button, and then something stopped me. Not logic, not strategy, just a strange feeling that had been growing inside me for weeks. What if this perfect setup was actually a trap? What if my certainty was the very thing that would destroy me? I had been losing consistently for 3 months. Not catastrophically, but steadily, like water dripping from a leaking pipe. Each loss was small enough to rationalize, large enough to hurt. I would review my trades at night, sitting in the dark glow of my laptop, and I couldn't understand it. My analysis was sound. My risk management was in place. My strategy was proven. And yet, I kept bleeding money. There were nights I couldn't sleep, staring at the ceiling while my mind replayed every entry, every exit, every moment where I thought I knew what the market would do next. The worst part wasn't the losses. It was the confusion. Because if I was doing everything right, why was everything going wrong? Then I read something that changed everything. It was a simple sentence, buried in an old trading psychology book. The author wrote that most retail traders have one fatal flaw. They believe their instincts are guiding them toward profit, when in reality those instincts are leading them straight into traps. Our brains, he explained, weren't designed for trading. They were designed for survival in environments nothing like the modern market. When we see a candle shooting upward, our primitive brain interprets it as opportunity, as food, as something we need to chase before it disappears. When we see a position moving against us, our brain screams danger, run, cut your losses even if the logical play is to hold. These instincts kept our ancestors alive on the plains of Africa. But in trading, they get us slaughtered. That morning, staring at that perfect breakout, I made a decision that felt insane. Instead of buying, I sold. My hands were shaking. My heart was racing. Every fiber of my being was screaming that I was making a mistake. But I clicked sell anyway, and I watched as the order filled. The price paused for a moment, hovering right at the breakout level, and then it collapsed. It didn't just fail, it imploded. Within 3 minutes, that textbook perfect setup had reversed into a brutal sell-off that would have wiped out my position, and then some. My opposite trade, the one that made no sense, had just saved me from disaster. I sat back in my chair, stunned. Not because I had made money, but because of what that trade revealed. My instinct, the voice I had been trusting for years, had been wrong. Not randomly wrong, but consistently, predictably wrong. It was as if I had been reading the map upside down this entire time, wondering why I kept ending up in the wrong place. The question that haunted me for the rest of that day was simple and terrifying. If my instincts were my enemy, what did that mean for everything I thought I knew about trading? Let me tell you what happened over the next 3 weeks. I started running an experiment, a brutal, uncomfortable experiment that would tear apart everything I believed about myself as a trader. Every time I felt a strong urge to enter a trade, every time my analysis pointed clearly in one direction, I would do the opposite. If my gut screamed buy, I sold. If my fear told me to close early, I held. If my greed whispered to add to a winning position, I stepped back. It felt like psychological warfare against myself. Each opposite trade was an act of betrayal, a middle finger to my own judgment. And the results were shocking. The first week, I went 4 out of 7 trades profitable. That might not sound impressive, but understand, I had been losing 7 out of 10 trades for months. The opposite approach had instantly doubled my win rate, but the emotional toll was devastating. Every winning trade felt wrong. I would close a profitable opposite trade and feel no joy, only confusion and something close to shame. Because if doing the opposite of what I believed was right, what did that say about me? Was I really that broken? Was my judgment really that flawed? There was a trade that broke me. It was late at night, past midnight, and I should have been sleeping, but I couldn't stop watching the charts. A setup appeared that looked so obvious, so guaranteed, that I actually laughed out loud. It was a perfect retest of support on a major currency pair, everything aligned, price action clean, momentum building. My analysis said buy with absolute confidence. But my new rule, my opposite rule, demanded I sell. I hovered over that sell button for 2 full minutes, my finger trembling, my throat tight. I actually started talking to myself. This is stupid. This is the one time you should trust yourself. This setup is different. But I had made a promise, no exceptions, no rationalizations. So I clicked sell, and I watched in horror as the price immediately bounced upward, exactly as my original analysis predicted. My opposite trade was bleeding red, and every tick higher felt like a punch to the gut. I closed my laptop. I walked away. I paced my apartment for 20 minutes, convinced I had just proven that this whole opposite experiment was nothing but self-sabotage. But when I came back, when I forced myself to look at the chart again, something had changed. That bounce had failed. The price had reversed and was now plunging through support, cascading downward in a waterfall of selling pressure that would have destroyed any long position. My opposite trade, the one I had almost abandoned in frustration, was now deep in profit. And I sat there in the darkness, my face lit by the glow of the screens, trying to understand what this meant. The pattern became undeniable. My instincts weren't just occasionally wrong. They were systematically wrong in predictable ways. When I felt fear, it was usually at the moment I should be entering. When I felt confidence, it was usually at the top. When I felt the desperate need to act immediately, it was usually right before a reversal. My emotions weren't random noise interfering with good judgment. They were inverse signals, a backwards compass that pointed toward danger whenever I thought it was showing me opportunity. But here's what nobody tells you about this kind of discovery. It destroys you before it rebuilds you. Because once you realize your instincts are your enemy, you can't trust anything. Every decision becomes a torture chamber. Should I follow this opposite rule, or is this the exception? Maybe my instinct is right this time. Maybe I'm overthinking. Maybe I'm underthinking. The constant second guessing is exhausting. There were days I would sit at my desk for hours, unable to take a single trade, paralyzed by the war between what I felt and what I had learned to do. I remember calling my wife into the room one evening. She asked me how trading was going, and I broke down. Not crying, just this overwhelming flood of frustration and confusion. I told her I didn't know who I was anymore. If I couldn't trust my own judgment, if my gut feelings were actively harmful, then what was left of me? She listened, and then she said something that hit harder than any losing trade. She said, maybe you're not supposed to trust yourself. Maybe trading isn't about trusting yourself. Maybe it's about trusting the process even when it feels wrong. That word, process, stuck with me. Because what I had been doing for years wasn't really trading. It was reacting. I was a collection of emotional responses wrapped in technical analysis, a bundle of fear and greed disguised as strategy. The opposite trade wasn't about doing the reverse forever. It was about breaking the reaction patterns, about creating space between impulse and action, about learning to see my own mind clearly enough to know when it was lying to me. Let me break down what I learned about why this works. Our brains are hardwired with something called loss aversion. The pain of losing $100 is psychologically twice as powerful as the pleasure of winning $100. This means when we're in a losing trade, we become desperate to avoid realizing that loss. We hold too long, hoping for a reversal that rarely comes. But when we're in a winning trade, we become terrified of giving back those profits. We close too early, missing the larger move. This asymmetry, this imbalance in how we feel pain versus pleasure, systematically destroys our trading results. Then there's confirmation bias. Once we enter a trade, our brain goes into defense mode. It hunts for any information that confirms we were right and ignores any evidence that we were wrong. You've experienced this. You're long on a stock, and you start noticing every bullish article, every positive tweet, every green candle that validates your position. Meanwhile, warning signs, volume dropping, momentum fading, resistance levels failing, all of that gets filtered out by your subconscious need to be right. We don't analyze trades objectively. We defend them emotionally. And FOMO, the fear of missing out, might be the cruelest trap of all. The market makes its biggest moves when emotion is highest. That's when everyone is piling in, when the momentum looks unstoppable, when your fear of being left behind becomes unbearable. And that's exactly when the smart money is exiting. By the time you feel that overwhelming urge to jump in, you're not catching the beginning of a trend. You're providing liquidity for everyone who got in early and is now looking for someone to sell to. The opposite trade works because it attacks these biases at their root. When you feel the strongest urge to buy, that feeling is usually a cocktail of FOMO, confirmation bias, and overconfidence. By forcing yourself to consider the opposite action, you create a circuit breaker. You introduce doubt into a system that was running on pure emotional certainty. And in that moment of doubt, in that pause, you can sometimes see what you were blind to before. But I need to be honest with you. This isn't a magic solution. I ran this experiment for 6 weeks, documenting every trade, every emotion, every result. Out of 42 opposite trades, I was profitable on 27. That's a 64% win rate, far better than my previous performance, but far from perfect. There were trades where doing the opposite was just as wrong as following my instinct would have been. There were times when the market moved in completely unpredictable ways that had nothing to do with my psychology. The opposite trade isn't about being right all the time. It's about breaking your patterns long enough to see them clearly. What happened after those 6 weeks was more important than the win rate. I stopped needing to do the opposite. Not because I had mastered the markets, but because I had begun to understand myself. I could feel when my judgment was contaminated by emotion. I could recognize the physical sensations, the tightness in my chest, the urgency in my thoughts, the tunnel vision on the charts, that signaled I was about to make a reactive, bias-driven decision. The opposite trade had trained me to pause, to question, to breathe before acting. There's a concept in psychology called metacognition. It's the ability to think about your own thinking, to observe your own mental processes as they happen. Most people go through life on autopilot, their thoughts and emotions driving their actions without any conscious oversight. But traders can't afford that luxury. When you're wrong in trading, the market punishes you immediately and precisely. Every mistake costs money. Every emotional reaction shows up in your account balance. The opposite trade drill is a form of forced metacognition. It makes you watch your own mind, to see your biases in action, to catch yourself in the moment of delusion. I want you to try something. Not with real money, not yet, but as a mental exercise. For the next 5 trades you want to take, don't take them. Instead, write down what you wanted to do and why. Write down what you were feeling. Was it confidence? Fear? Excitement? Desperation? Then watch what happens. See if your intended trade would have worked or failed. Don't judge yourself. Just observe. Because the first step in changing your trading isn't better analysis or more indicators or a new strategy. It's learning to see yourself clearly, to recognize the patterns in your own behavior that have been sabotaging you this entire time. Here's what I discovered in those weeks of doing opposite trades. I had 3 major patterns that were killing me. The first was chasing momentum. Anytime I saw a strong move, I felt this magnetic pull to jump in. My brain interpreted speed as opportunity. But I was almost always late. By the time I felt that irresistible urge to enter, the move was exhausted and ready to reverse. The opposite trade forced me to short into that momentum or stand aside, and both options were vastly better than chasing. The second pattern was cutting winners too early. The moment I saw profit, I became terrified of losing it. My brain screamed, "Take it now, lock it in." Don't be greedy. But markets don't reward fear. The opposite approach, holding when I wanted to close, let me capture moves I had been leaving on the table for years. Some of my opposite trades ran 3 or 4 times further than I would have normally held, simply because I trained myself to resist the urge to grab quick profits. The third pattern was revenge trading. This one almost destroyed me multiple times. After a loss, I would feel this burning need to make the money back immediately. My judgment would cloud, my risk management would collapse, and I would take impulsive trades that had no real edge. The opposite approach here was radical. When I felt the urge to revenge trade, I would force myself to close my platform and walk away. Not for 5 minutes, but for the rest of the day. At first, this felt like failure, like I was giving up. But over time, I realized that the money I saved by not revenge trading was more valuable than any winning trade I could have forced. Now, I know some of you are thinking this sounds extreme. You might be wondering if I'm suggesting you should always do the opposite of what you feel. And the answer is no. The opposite trade isn't a permanent strategy. It's a training tool. It's like those weights runners wear on their ankles to build strength. You don't wear them forever, but while you're wearing them, they force your muscles to adapt, to grow stronger. The opposite trade forces your mind to adapt, to recognize its own biases, to develop new reflexes that serve you better than the old ones. After 2 months, I stopped doing strict opposite trades. But I had built something more valuable than a system. I had built awareness. Now when I look at a chart and feel that urgent pull to enter, I don't immediately act. I pause. I ask myself questions. Am I feeling fear or confidence? Is this analysis or justification? Am I chasing or waiting? Would I take this trade if I had no position yet? These questions create distance between impulse and action. And in that distance, better decisions emerge. There's a trader I read about years ago who kept a note taped to his monitor. It said 4 words. The obvious trade fails. He explained that whenever a setup looked too perfect, too clear, too easy, that was usually when everyone else saw it too. And when everyone sees the same opportunity, there's no edge. The edge in trading doesn't come from seeing what everyone sees. It comes from seeing what others miss, from having the discipline to wait when others are rushing, from having the courage to act when others are paralyzed. The opposite trade taught me this truth viscerally. The trades that felt most right were often the worst ones. The trades that felt most wrong, that made my stomach churn and my hands shake, were often the ones that worked. This isn't because the market is deliberately perverse, though sometimes it feels that way. It's because our instincts are calibrated for a different environment. We evolved to chase visible prey and run from visible threats. We didn't evolve to navigate abstract systems, where the threats and opportunities are hidden in patterns of price movement that mean nothing to our survival brain. Let me tell you about the trade that finally made me understand all of this. It was 3 months into my experiment. I had stopped doing strict opposite trades, but I was still using the principles, the pause, the self-questioning, the awareness. A setup appeared on a stock I had been watching. Clean breakout, volume perfect, every technical indicator aligned. My old self would have jumped in without hesitation. But I paused. I noticed something. I felt too certain. That confidence, that sense that this was an easy win, set off an alarm. So I waited. I watched. And within 10 minutes, that perfect breakout failed. The price whipsawed back down, trapping everyone who had chased it, and then continued falling for the rest of the day. I didn't take the opposite trade. I didn't short it. I just sat there, watching, learning. And in that moment, I felt something I hadn't felt in months. Peace. Not because I had made money. I hadn't taken any position at all, but because I had beaten my old enemy. I had beaten the impulse, the urgency, the false confidence. I had seen the trap before it closed. That felt better than any winning trade. This is what the opposite trade really teaches. It's not about flipping every decision. It's about learning to recognize when your emotions are running the show, when your biases are distorting your perception, when you're about to make the same mistake you've made 100 times before. It teaches you that the voice in your head isn't always your friend. Sometimes it's your biggest liability. I want to give you something practical. A framework I developed from all of this. Before any trade, I ask myself 3 questions. First, what am I feeling right now? Not thinking, feeling. Am I excited, anxious, desperate, confident, fearful? Just name it. Second, have I felt this way before on a trade? Think back. Have you been in this emotional state when entering a position? And if so, how did those trades usually turn out? Third, what would I do if I had to do the opposite? You don't actually have to do the opposite, but asking the question creates that critical pause, that moment of reflection that can save you from reactive trading. These 3 questions take 30 seconds. But they've saved me more money than any indicator or strategy ever has, because they force me to see myself, to catch myself in the act of being human, of falling into the same psychological traps that have been catching traders for generations. There's something profound about realizing that your biggest obstacle isn't the market. It's you. The market is just moving, responding to supply and demand, following its own rhythms. It's not personal, it's not hunting you specifically. But your mind, your emotions, your biases, they are hunting you. They're sabotaging you from the inside. And until you recognize that, until you build the skills to observe yourself objectively, you're going to keep repeating the same patterns and wondering why the results never change. I spent years blaming external factors. I blamed market manipulation. I blamed algos and high-frequency traders. I blamed bad timing and bad luck. But the truth was simpler and harder to accept. I was my own worst enemy. Every impulsive entry, every early exit, every revenge trade, every moment of letting fear or greed override my plan, that was me destroying myself. The market was just providing the opportunity. The opposite trade was my way of forcing a confrontation with that truth. It was uncomfortable, sometimes painful, occasionally humiliating. But it worked. Not because doing the opposite is some magic formula, but because it broke my autopilot. It made me conscious of my own patterns. It gave me a tool to interrupt the cycle of reactive trading that had been bleeding my account for years. Now, several months later, I trade differently. Not perfectly. I still make mistakes. I still feel those old urges, the FOMO, the fear, the desperate desire to act. But I catch them earlier. I recognize them faster. And most importantly, I don't let them control me. The urge to trade and the decision to trade are now 2 different things. There's space between them. And in that space, I can think, breathe, choose. If you're watching this, and you recognize yourself in my story, if you've been trapped in that cycle of losing trades and crushing confusion, I want you to know something. You're not broken. Your instincts aren't defective. They're just calibrated for the wrong game. And that means you can recalibrate them. You can train new responses. You can learn to see your own mind clearly enough to know when it's helping you and when it's leading you into another trap. The opposite trade isn't for everyone. Some traders won't need it. They already have strong discipline and clear self-awareness. But for those of us who have struggled, who have felt that maddening disconnect between knowing what we should do and doing what we actually do, this tool can be transformative. Not because it's a system or a strategy, but because it's a mirror. It shows you yourself. And once you see yourself clearly, once you understand your patterns and biases, you can finally start trading in a way that works with your psychology instead of against it. The trade that works only when you do the opposite isn't really about the market. It's about you. It's about discovering that your greatest enemy and your greatest teacher are the same person. And once you make peace with that truth, once you stop fighting yourself and start observing yourself, everything changes, not overnight, not magically, but slowly, steadily, You begin to trade like someone who understands that the game isn't about predicting the market. It's about mastering yourself, and that's the only edge that really matters.